Good afternoon. This is Chris Brecher with the Chart Patterns Mastery December 3rd free video that includes simpler trading, includes all the rooms. So what's today about? Today is all about what the markets did on the close in relation to geopolitical events. So all this stuff about martial law declared in South Korea. So a lot of traders on the close, I'm not talking about after the close, but on the close, they just reverted to unchanged. So the S&P was almost unchanged. Now, the thing is, the reason that we were talking about selling rallies into a geopolitical event and not selling dips is because world markets refused to go lower on that. As you see, the Nikkei was way up today. So the German market was way up. They sold off on the close somewhat, but they didn't sell off because of those geopolitical events, and that's why we weren't that bearish. Now, just to let you know, in the long run, we're starting to see some divergences. On the other hand, at this time of year, usually the divergences don't work as well. So we have like an XSP put fly we're losing on, but we're up in most everything else. So just to show you what we're talking about, here's the ES, and we're going to take a 4-hour chart. We're going to take in here the 20 moving average, which is the purple line, and the 50 moving average. So we can even take off the ATR trailing stop if that gets confusing. There. And what we're going to watch is in relation to other indexes or futures. So we're going to take the Russell. As you see, the Russell is actually decisively under the 50 and the 20. The transports, that's the index, is almost at the 50. How about the YM? It's decisively under the 20. So a number of indexes on a 4-hour chart are decisively under the 20. On the other hand, the Russell and the NASDAQ are decisively over it. So at the moment, you might say, well, that means they have to go down. No, not necessarily. And the reason is the point of no return. This isn't down enough. It's down, but it's not down like down here and the NASDAQ's up on the right. So the same with the Russell. It's down, but it's not really, it's decisively under that, but it's not like it's here. If I saw this here, and I saw this here, well, that's a whole different situation, but we don't have that yet. Now, keep in mind you have the unemployment report on Friday. So the bonds have started to sell off somewhat, and they were led by the utilities selling off. The utilities rallied, and then the bond market rallied as a delayed reaction. The utilities now have gone down for no reason, but that's 3 points. That's a lot for the XLU. That gave you a tip off the bonds were going down. I wouldn't be surprised if by the close on December 5th, which is Thursday, the markets revert. Just like today you saw the markets revert because of some political instability. I wouldn't be surprised to see the markets revert to unchanged on Thursday. The key is from where? And we don't know that yet. But I'm telling you right now, we're still going to find longs. We're going to look for shorts, and I'll show you why. Because when you see this on the left, you see the NASDAQ up here. But on the right, you're starting to see some little cracks. The American Express, all the leaders, the financial companies, starting to go down. That's a big divergence. That's 7 points. Goldman Sachs going down. MasterCard going down. So we're starting to see some divergences with non-NASDAQ stocks. We'll see if that's enough to bring down the ES. That's what we'll be watching the next couple of days. Have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.